Welcome to the deep dive. We're here to cut through the noise and get you properly informed. Today, we're looking at something big on the horizon. Maybe think of it like a coming storm. Yeah, one that's set to really reshape the crypto world, but not from inside crypto itself. It's coming from an unexpected external force, AI regulation. So our mission for this deep dive is simple. We want to give you a shortcut, a way to understand this really complex intersection. We're going to unpack how this rapidly evolving, often fragmented landscape of global AI regulation is casting this long shadow over crypto and over decentralization itself. We'll pull out the most important insights, spot those aha moments, and give you practical takeaways on what this actually means for you. It doesn't matter if you're an investor or dev or just fascinated by all this.
Yeah, it's really interesting because you might think of AI and crypto as totally separate conversations, right? But they're actually on a collision course. And understanding that collision, what it means for decentralization, it's critical right now. The whole landscape isn't just shifting. It feels like it's being fundamentally redrawn.
Like what you hear? Subscribe and hit the bell. New episodes every week.
Yeah, what you find is this really uneven advancement across the globe. It's creating this complicated patchwork of rules. And you can imagine that makes operating internationally a real maze for any crypto project.
That's exactly it. This fragmented landscape, that's probably the most immediate challenge. So let's look at Europe. They really broke new ground with the EU Artificial Intelligence Act. That was mid-2024. And people are calling it the world's first comprehensive AI law. It's not just some minor rule. It uses this risk-based approach. So really strict requirements on what they call high-risk AI systems.
High risk
Yeah.
What exactly?
Things like AI and medical devices, credit scoring, critical infrastructure, that kind of thing. These systems face tough demands for data governance, transparency, human oversight, the works. The EU Act even bans certain things outright, like social scoring or real-time biometric surveillance in public spaces. Now, full enforcement isn't until 2026, but it really plants a flag. Europe is setting a standard, kind of like GDPR did for data privacy.
Right, GDPR. Okay, so that's a clear, pretty ambitious approach from the EU. How does that compare to the US? Is it similar?
Not really. The United States is quite different. There's no single overarching federal AI law. Regulation there is much more fragmented. It's happening mostly at the state level or through executive actions. Just in 2024, I think at least 31 U.S. states enacted some kind of AI-related law or resolution.
31.
Yeah. You've got Colorado looking at high-risk AI, bias prevention disclosure, California mandated labels on AI-generated election content, New Hampshire even criminalized malicious deepfakes. And federally, there's been a bit of, regulatory whiplash. President Biden put out an executive order in late 2023 for safe, secure, and trustworthy AI. But then, early 2025, President Trump's administration came in and rescinded it. The priority shifted to unfettered AI innovation, U.S. competitiveness.
Okay, so a real back and forth.
Exactly. It shows this ongoing debate in the U.S. How do you balance the risks with innovation? So far, it's mostly resulted in guidance, some narrow bills, but no big comprehensive framework like the EU's.
A really stark difference then. And China, we hear a lot about their approach being very top-down.
It is. China's approach is, distinctively Chinese.
Right.
It's rooted in tight government oversight. They've been very proactive, rolling out rules from 2023 to 2025 to make sure AI develops, let's say, safely under state control. Back in August 2023, their interim measures for generative AI services kicked in. That requires providers of public AI systems to ensure content is lawful, truthful, label AI-generated stuff, and even register their algorithms.
Register the algorithms.
Yeah. And then by March 2025, Beijing went even further. They mandated labeling for all AI-generated content online. Their goal seems pretty clear. Guide AI development so it aligns with state objectives. They support innovation, sure, but within heavy restrictions on content and data.
So you can really see this global divergence. You've got the strict EU, the patchwork US, top-down China. The key insight here isn't just that it's complicated, it's that this fragmentation is creating like a regulatory arbitrage situation, isn't it? It forces crypto projects to think strategically about where they operate, maybe even change how they're built, just to navigate this compliance maze, often at the expense of real decentralization.
And that brings up a key question. Why now? Why this sudden, really dramatic acceleration in AI regulation just in the last couple of years? It doesn't feel like a coincidence. It seems driven by this powerful mix of factors that pushed AI from, a niche tech thing to a global hot topic almost overnight.
Definitely. First, you got these rapidly growing societal fears. Think about deepfakes, this hyper-realistic AI-generated stuff being used for disinformation, fraud, trying to sway elections.
It's worrying.
Hugely. Polling showed, over 75% of Americans think using deepfakes to influence elections should be illegal. That's real public pressure. And then there are autonomous systems. Self-driving cars, AI making decisions in finance, even defense.
The stakes are incredibly high there. High-profile accidents with autonomous vehicles, the whole idea of AI-powered weapons.
Yeah.
It really raises the bar for safety and accountability.
Yeah, absolutely.
And it's not just the fear factor. There's also the massive economic disruption angle and this fierce strategic race between nations. AI systems like ChatGPT, they're expected to displace or totally transform millions of jobs. That raises real fears of social upheaval if it's not managed well.
Right.
Plus, countries are genuinely worried about keeping a technological edge, especially compared to China. You hear lawmakers cite this strategic competition all the time as a reason for proactive AI policy.
Enjoying the insights? Tap subscribe and enable notifications so you never miss our next market move, news, charts, and opportunities as they happen.
So AI basically went from 0 to 60, right? From niche to mainstream, almost instantly. Think about ChatGPT's adoption rate. And that created huge pressure, public pressure, expert pressure on governments to do something and do it fast.
Exactly. That urgency explains things like the White House roundtables with AI CEOs, the sweeping EU proposals coming out so quickly.
Okay, so here's the critical pivot for us. We've got these varied national approaches, these urgent drivers. But are there any common themes emerging in these early policies, despite the differences?
Yes, absolutely. And this is where it gets really interesting for crypto. Despite that fragmentation we talked about, you can definitely see three common threads weaving through these early AI regulations worldwide. It suggests where governments are likely to agree, or at least focus their efforts.
Okay, let's dive into those common principles. And crucially, let's see where they might directly clash with crypto. First up is data governance.
Right. Data governance is huge for regulators. The core idea is making sure the data feeding AI models is handled properly. That includes privacy protections, but also ensuring data provenance, knowing where the training data actually came from. They want quality, unbiased data.
Makes sense.
So you see the EU AI Act demanding strict data management for high-risk systems. In the U.S., draft bills like the Algorithmic Accountability Act aim to tackle biases in training data. Now, the collision with crypto is pretty fundamental. Blockchain's whole ethos is often about open, immutable data.
Right. Immutable. Can't change it.
Exactly. Which makes it incredibly difficult to honor things like the right to be forgotten or data correction rights that are central to privacy laws like GDPR. We already see this tension between GDPR and public blockchains. And there's another layer. AI analyzing public blockchain data could potentially de-anonymize wallets. That undermines the privacy many users expect and could lead to big fines if it violates data protection rules.
That is a fundamental conflict. That immutability really creates a direct clash there. Okay, what's the second common thread that could impact us?
The second one is algorithmic transparency. The basic principle is that AI algorithms shouldn't be total black boxes. Decisions, especially those affecting people's rights or finances, should be explainable, auditable. Regulators want clarity.
So you need to be able to see how it works, essentially.
Very much. The U.S. blueprint for an AI Bill of Rights push for disclosure. The EU AI Act mandates telling users when they're interacting with AI. Some places are even writing in a right to an explanation for AI decisions.
Okay, and the crypto collision.
It's significant. Think about complex machine learning models or decentralized networks. There are often no single entity to provide an explanation or detailed documentation. It's inherently distributed. And this idea of a human in the loop, which regulators often recommend for AI accountability, that's often minimized or absent in DeFi and autonomous crypto systems by design.
Right, the whole point is automation.
Exactly. And we're already seeing signals from regulators like the SEC and FinCEN that they expect transparency in AI used in finance. That pressure is likely coming for crypto too.
That sounds like a massive challenge for things like DAOs, decentralized autonomous organizations. If an AI DAO makes a call, who explains it? Okay, what's number 3?
The third common thread is accountability. Simple question. Who is responsible when AI messes up? Regulators want to ensure there's always a person or a company liable for an AI system's actions.
Someone to point the finger at.
Essentially, yes. So you see requirements like AI system registers. The EU is planning a public database for high-risk AI and conformity assessments before systems can be deployed. The friction with crypto here is sharp, given the emphasis on decentralization and autonomy. Just imagine trying to legally designate an accountable party for a fully autonomous, AI-driven DeFi protocol that glitches and loses millions. Who do you sue? Where's the CEO?
It's a legal headache waiting to happen.
It really is. It directly challenges the core code is law, or autonomous ethos of many crypto projects.
So these three big principles, data governance, transparency, accountability, they seem sensible on their own, maybe, but they look like they're heading for a direct collision with how crypto often operates. Open data, pseudonyms, autonomous code. Let's really focus in on those collision points.
Okay, first, let's deepen that data privacy versus blockchain transparency conflict, because this is something you really need to grasp. AI laws are pushing for individual control over data, including the right to delete it.
The right to be forgotten.
Exactly. But blockchains are built on public, immutable ledgers. Data, once recorded, generally can't be altered or erased. The European Data Protection Board has already flagged this, warning that immutable ledgers might just be incompatible with data protection laws like GDPR.
So they're already seeing the clash.
They are, and add to that, these blockchain analytics firms using sophisticated AI and machine learning, they're getting better and better at de-anonymizing wallets, linking supposedly anonymous addresses to real-world identities. Now, maybe that helps with tracking illicit funds, but it blows a hole in user privacy, potentially exposing sensitive financial data. That could trigger massive fines under GDPR or similar regulations if data is misused.
A real double-edged sword there. Okay, what about explainability in decentralized networks? That sounds like another huge hurdle, especially for DeFi.
It absolutely is. Regulators, especially in finance, are getting very insistent. AI decisions need to be explainable, auditable. In traditional finance, you document your models, you can show regulators how they work. But how does that work for a decentralized AI project? Or an autonomous trading bot running purely on smart contracts? There's often no central team, no one to provide the documentation. And we mentioned the human in the loop that safety net regulators like. DeFi often deliberately minimizes or removes that human oversight to achieve speed and automation.
That's the whole point, the efficiency.
Exactly. But agencies like the SEC and Fencian are already saying AI in finance needs transparency. So you could see DeFi platforms being forced to add extensive logging, maybe even human review steps. That could slow down the very frictionless automation that makes DeFi appealing. It might even force a rethink of their whole trust model.
This tension feels like it's just begging for regulatory arbitrage. That's a dynamic crypto knows well, right? Moving to friendlier jurisdictions.
Precisely. It's a classic crypto move, now potentially playing out with AI. If, say, the EU imposes really strict AI rules, algorithm registration, complex explainability requirements, what happens? Projects might shift development, or even their whole operation, to places with looser laws. We're actually seeing whispers of this already. Some European tech startups reportedly eyeing the US or elsewhere, citing the EU AI Act as too burdensome. You'd even see a kind of flip-flop. Jurisdictions with lax AI rules might attract AI-heavy crypto ventures. Meanwhile, jurisdictions with lax crypto rules might attract projects trying to avoid strict AI mandates elsewhere.
So a complex game of jurisdictional chess.
Exactly. It creates these uneven innovation pockets, but it also frustrates regulators. They worry about a race to the bottom where companies just play jurisdictions off against each other to avoid meaningful oversight.
Okay, so summing up these direct clashes, we're basically looking at irreconcilable philosophies, aren't we? Controlling data versus democratizing it, human accountability versus trusting autonomous code, uniform rules versus hopping between jurisdictions.
That's a good way to put it.
And for you listening, this means crypto projects using AI will have to tread very carefully. They might need to change core features, add privacy layers, build in explainability, maybe even geofence users based on local laws just to survive. Now, beyond these direct hits, how might this interplay between AI regulation and crypto create unexpected market dynamics, feedback loops?
That's a crucial next layer to consider, especially for investors and developers. One obvious area is those AI-powered crypto trading bots and analytics tools.
Yeah.
They're very popular.
Yeah, tons of them.
But they often use machine learning, sometimes in opaque ways. They could face real compliance hurdles if new AI regs demand transparency, risk controls, things like that. Regulators might worry about opaque AI making markets unstable. They might demand kill switches, detailed logging of every trade decision for audits.
And the accountability question again.
Right. Who's liable if an AI bot goes rogue and violates market rules? Regulators will almost certainly insist that humans remain accountable. That could slow down the rollout of truly autonomous AI trading.
But is there an upside?
Well, possibly. Here's the counterpoint. Mhm. If AI regulation actually brings more credibility and structure to AI in finance, maybe institutional players get more comfortable using AI for crypto trading, because now there are clear standards and guardrails.
Interesting. So regulation could simultaneously constrain and legitimize. That's a pattern we see sometimes. What about crypto's classic response to rules-building alternatives?
Yeah, we're almost certain to see the rise of AI-proof or maybe AI-resistant crypto projects. Think about privacy coins emerging in response to KYCAM rules.
Right, like Monero or Zcash.
Exactly. So now you might see projects like SingularityNet, Fetch.ai, Bitensor. They're already building decentralized marketplaces for AI models and services. Their pitch is often AI by the people for the people, implicitly resisting centralized control or regulation. And you might even see new cryptocurrencies marketed specifically as AI resistant. That could easily lead to speculative mini bubbles like we saw with that huge surge in AI-related tokens after ChatGPT first launched.
Ah, yes, the AI token craze. That makes sense. But is there any scenario where AI regulation could actually be a net positive for crypto? Any silver lining?
It sounds counterintuitive, maybe, but yes. Clear AI rules could indirectly benefit crypto by bringing more stability and legitimacy to the whole digital economy. Think about it. Big institutional players have been cautious about both AI and crypto, partly because of the regulatory uncertainty, the Wild West factor.
True.
If governments manage to enact sensible AI regulations that build trust, it could boost overall confidence in advanced tech. We've seen this happen in crypto itself, right? Regulatory clarity like the EU's MiCA framework has demonstrably helped institutional adoption. So if AI laws tame the perception of AI as this uncontrollable force, that increased confidence might spill over into crypto investments, especially for compliant stablecoins or blockchain platforms that meet the new standards.
That's a really interesting take. Regulation taming the Wild West could actually boost confidence overall. Okay, let's get even more specific. How will these ripple effects play out in distinct crypto sectors? Where will you, our listener, feel this most acutely?
Okay, let's break it down. First, stablecoins and DeFi protocols. Algorithmic stablecoins are definitely in the crosshairs, especially after the Terra Luna collapse.
Yeah, that didn't help their reputation.
Not at all. AI-driven mechanisms used to maintain a peg might easily be classified as high-risk AI systems under rules like the EU AI Act. That means heavy documentation, impact assessments, maybe even needing pre-approval, and new laws are targeting them directly. The U.S. Genius Act, expected around 2025, looks set to mandate full backing for dollar-peg stablecoins. That basically outlaws purely algorithmic designs. The EU's MiCA regulation also has strict reserve and transparency rules.
So pure algo stables look like they're on the way out.
It certainly looks that way in major markets. And for broader DeFi, protocols using AI for automatic decision-making, setting interest rates, triggering liquidations they could be forced to reveal their algorithms, implement safety checks or throttles. You'll probably start seeing AI-compliant branding as both a marketing tool and a regulatory necessity.
Okay, that's DeFi and stablecoins. What about the world of NFTs and digital content? AI is huge there too.
It is. The main collision point for NFTs is around intellectual property and content authenticity. A big issue is the legal status of art generated purely by AI, which is often minted as NFTs. Right now, US and EU law generally leans towards denying full copyright protection because there's no human author. A U.S. federal court confirmed this view in 2023.
So if an AI makes it, it might not have copyright.
That's the current direction, and that raises huge questions about the long-term value and enforceability of rights associated with AI art NFTs. Plus, remember, China's mandatory labeling for AI content that could easily extend to NFT marketplaces, forcing them to tag AI-created art.
Oh, transparency again.
Exactly. And then there's the whole debate about AI models trained on copyrighted images without permission. That affects NFTs featuring AI mashups or derivative works. NFT platforms are definitely going to need clear policies on AI-generated content.
That's massive for creators and collectors. It really shapes what even counts as ownable digital art. Okay, lastly, what about the infrastructure, guys? Crypto exchanges, custodians, and service providers.
This is an interesting one. Financial regulators are actually encouraging them to use AI for compliance tasks. Anti-money laundering, AML, know your customer, KYC.
Right, using AI to catch bad actors.
Precisely. Exchanges like Kraken already use AI partners like Jumio or OnFido for ID verification, fraud detection, transaction monitoring. But here's the twist. Those AI compliance tools themselves will likely face stricter oversight under new AI regulations. If an AI system flags a transaction or denies someone an account, Its decision might need to be explainable, especially under rules like the EU AI Act, where many financial AI systems are deemed high risk.
So the AI watching the watchers needs watching.
Kind of, yeah. This will definitely spur a big market for specialized AI-powered RegTech, regulatory technology solutions designed specifically for crypto. It might also lead to consolidation, favoring larger exchanges and custodians who can afford to build or buy these sophisticated compliant AI systems.
Okay, it's crystal clear. Pretty much every corner of the crypto world is going to feel these ripples, from stable coins to digital art to how exchanges run their back office. So let's bring it home. As an investor, entrepreneur, someone navigating this space, how do you position yourself wisely? What's the strategy?
I think the first step is learning to distinguish between, let's call them AI-friendly and AI-vulnerable crypto projects.
Okay, what makes a project AI friendly?
These would be projects that actively facilitate compliance. Maybe they offer enhanced transparency features or tools for selective data disclosure that align with privacy rules. You might also see projects partnering with governments on AI safety research, or maybe even using blockchain to certify AI models or track their training data, things regulators might actually like.
And AI vulnerable.
Those would be projects relying heavily on practices that AI regulation seems poised to restrict. Think protocols used to easily generate deepfakes, or using opaque AI for things like credit scoring without explainability. Even privacy coins could become more vulnerable if AI-powered surveillance makes enforcement much easier for authorities. Ultimately, adaptability, strong governance, and choosing your operating jurisdiction carefully will be really key differentiators for survival and success.
Okay, now for maybe the most critical takeaway for you listening. In any gold rush, the smart money is often on selling shovels. What are the shovels in this new AI crypto regulatory era?
That's a great analogy. And yes, there are definitely shovel opportunities emerging. One huge one is AI-driven compliance solutions, RegTech, specifically built for crypto. Yeah. This is a niche that's set to explode. Think about AI systems for automatically auditing smart contracts, doing super accurate identity verification that meets new standards, or providing real-time blockchain monitoring to flag illicit activity more effectively than ever before. Investment will flow here.
Makes sense. What else?
Yeah. Another big area is AI model governance platforms. These are tools to help companies manage their AI models responsibly, tracking datasets used for training, running bias tests, documenting everything, and crucially, maybe storing that evidence on an immutable ledger, using blockchain itself to prove compliance to regulators.
Using crypto tech to solve the compliance problem.
Exactly. There's a certain irony, isn't there? After years of crypto being about disrupting regulation, a big part of its future might actually lie in embracing and facilitating regulation, with AI being a key tool to do that.
That is quite the turn. So what about portfolio strategy? How should people be thinking about their investments?
Well, diversification is always key, especially in uncertain times. But you might want to ensure you have some exposure to those foundational projects that could underpin a regulated, AI-powered digital economy. Think decentralized data marketplaces that respect provenance, robust identity networks, or transparent audit trail solutions that regulators might come to rely on. You can make a calculated bet on some AI-resistant plays, but you have to be aware of the high volatility and the significant enforcement risks they carry. And definitely watch where the institutional money flows. Big capital moving into compliant or AI-integrated projects will be a strong signal. I think the next 3 years or so, say 2025 to 2028, are going to be a really important sorting period for the market. We'll see who adapts and who doesn't.
Okay, so let's try and bring this all together. The bottom line seems to be that the impact of AI regulation on the crypto world is going to be, well, profound, multifaceted. It's going to reshape data practices, demand totally new levels of transparency, and ultimately change the game for which crypto projects thrive and which ones struggle.
Absolutely. The single biggest takeaway for everyone listening, whether you're building, investing, or just watching, is stay informed and be ready to adapt. This legislative landscape is moving fast. What felt like a Wild West for AI just a year or two ago is rapidly becoming a governed space. And crypto will feel those shockwaves. There's no avoiding it.
So keep a really close eye on policy developments, especially in the major markets. The U.S. Congress, the European Commission, China's Cyberspace Administration. The early signals from those places will give you clues about which crypto sectors might surge next or which might face serious headwinds. And remember, regulatory change, even though it feels daunting, can eventually bring clarity. And that clarity can actually enable growth. We saw that with earlier crypto regulations boosting institutional confidence.
That's right. And engaging constructively is important too. Talking to lawmakers, advocating for rules that are innovation-friendly but also responsible, that's vital for shaping an ecosystem that actually works.
Okay, let's leave you with a final provocative thought to chew on. The era of purely unregulated move fast and break things innovation might be waning, particularly where AI and finance intersect. The future might belong to those who figure out how to innovate within the new rules of the game. So, the question for you is, what new opportunities might you uncover by embracing this shift? How could you become a pioneer in this emerging, compliant, AI-powered digital economy?
If this breakdown helped, subscribe and turn on notifications. You'll get the next market brief the moment it drops. See you soon!